Well, we've had such mixed expectations for the NSE's performance this week. On the one hand, some market watchers saying that the NSE was going to continue on its bearish run. On the other, we had some saying that bargain hunting was going to start acting as some kind of catalyst for market momentum moving forward. I mean, what's your view on the markets at the moment, and what's your view on how we're set to wrap this week up?
I think the market will still be flat this week. I mean, we started with the activities of profit takers, coming on last week Friday, extending till Monday this week. But from Tuesday, Wednesday, and a bit of yesterday, we actually saw the market picking up, the volumes actually picking up. But we expect the market to be slightly flat today.
The spotlight is still on the banking sector. I mean, we had the banking conference taking place in the country yesterday. What did the market make of that conference, and were there issues that were addressed that were of concern to the markets?
I think a major aspect, that was addressed by the conference yesterday, for example, where the central bank and the Minister of Finance were represented, was the fact that there is no discordant tunes between the central bank and the Ministry of Finance. We saw the minister actually expressing the support of the government, to all the actions taken so far by the central bank governor, and the governor also mentioning that the acting president of Nigeria has been in full support of all the actions taken so far. So we think with that, the confidence of investors are going to come back to the market, and people will continue to take positions in the banking industry.
Of course, this is a really important consideration at a time where, to a large extent, the greasing the wheels of the economy is so dependent on credit lines and liquidity provided by these banks moving forward. In the meantime, what kind of liquidity levels are we seeing in the Nigerian markets at the moment? Are we seeing signs of credit lines actually drying up?
During the week, there was the milestone. There was an event where the EIB actually signed an agreement with 3 major Nigerian banks, Stanbic IBTC, Citibank, and GT, where they actually extended huge lines to them. That was a reinforcement of the confidence level that the EIB has in the Nigerian economy. We've not really seen credit coming back to the retail end of the market yet, but we think that with the kind of initiative of the central bank governor, the support is getting from the authorities, and with what happened this week from the EIB, we're going to see a lot more credit lines coming into the Nigerian sector, and ultimately it will filter down to the real sector, the non-oil sector, and we think it will have an impact ultimately on the stock exchange as well. Well,
certainly 3 banks, a good place to start. We were saying yesterday, though, how several banks still have margin stocks in their portfolio, and that bulk of the sales that we could be seeing this week could comprise such stocks as banks try to reduce their losses. Certainly, it's not only the banking segment that's trying to reduce their exposure to riskier assets. We saw ICO Insurance announcing strong 9 months earnings growth of 63%, and that implying that it's got a relatively low exposure to the equities segment during that period. The insurance sector was upbeat yesterday with more gains. Are we starting to see this shift where insurance companies in Nigeria are focusing on their core business once more, as opposed to relying on investment income?
This year, the NICOM, that's the regulator for the insurance sector, has issued some new guidelines to assist and to focus insurance companies in the kind of investment decisions that they make. And I think we are going to see a lot more impact of that, in the months to come when they start releasing their results. Yes, last year, a lot of them actually returned to had poor results because of the huge provisions that they had to make, or they had to take for their exposures to the equity market. But we are seeing a number of the insurance companies. You mentioned ICO now. We're seeing the likes of Custodian and a very strong brand like GT Assurance also posting very good results. And we think that the focus will come back onto the insurance sector right now, as they are driving or focusing more on their primary responsibilities of insurance and not investment in the equities market, where a number of them do not really have the skills, but they were just lured into it by the huge returns the capital markets had a few years back.
Well, certainly yesterday's trading session saw consolidating on gains for Custodian Allied and GT Assurance. They stood in the spotlight, both booking gains of 4.2 and 2.2% respectively. What is a stock pick for you in that space right now?
In the insurance space, I mean, the word is still caution. I mean, we need to see the insurance companies actually focusing on their main business, as I said earlier. I mean, but we've seen a few of them, and there are very few, even though we have 49 insurance companies, there's just about 3 or 4 that you will see that are focused and actually doing the business the way it should be done. For such companies, which, I mean, you can get to know them if you analyze their financials properly, the future is bright. You know, but for the others, I will still ask that you should be a bit cautious. I mean, year to date, the insurance company, the insurance index, I mean, is down minus 10%. The all-share index is up 10%. So, I mean, the correlation is not there yet, and that's because a number of these insurance companies are still being dragged down. Investors are viewing them negatively, you know, so they are impacting on the very good ones. So the word in that sector is still caution for now.
Let's take a look at a sector that has managed to remain pretty resilient throughout the downturn. That's the food, beverages and consumer space. Overall, doing well. Yet a stock I want to look at today, PZ Cousins, reporting an 8.7% improvement in net earnings, to which the market didn't react too positively. Yesterday, again, we saw that stock on the loser board. Surely growth is something that investors wouldn't be turning their noses up. Yes, it was only 8.7% growth that we saw filtering through, but growth nevertheless. So what are some of the pressure points for PZ Cousins?
PZ is a very strong brand, I mean, related to PZ Cousins in Manchester in the UK. I think the reaction we saw yesterday should not be just looked at in isolation. I mean, over the last 1 year, I mean, the performance of PZ has been in excess of 110%. I mean, that's in a market where the all-share index was negative, minus 38%. The stock return index of 110%. What has happened in PZ's case is that we've seen very, very astute investors taking position in the stock right from the beginning of last year, when every other person was looking elsewhere, putting money in fixed income and the like. You know, I mean, the potentials of the company are still great. The returns are still fantastic. And what we saw yesterday was just reactions of what I would say people that have already made good profit, just trying to exit while allowing new guys to come into the stock. So it's not something negative. I mean, you see these ups and downs occasionally. Well, I think PZ is still a very good stock. On our rating grid, it's still a buy, and we think it has a potential upside of about 19% in addition to what it's currently trading at. Let's
take a look at another player in that space. Flourmills posted impressive Q3 results, and when I look at this figure, it's almost unbelievable here. I mean, a PAT growth of 1,026%. I mean, market reaction to that has had to have been positive.
Flourmills is a stock that last year, I mean, posted, actually had to write off a huge chunk of their earnings due to FX losses they made in 2008 following the devaluation of the Naira. Flourmills is a company that's performing very well in the sector where it operates. I mean, and the forecast buy horse is still a buy. We think the company still has about 22% upside to its price. Flourmills is a company that's well managed, is well respected in Nigeria. They don't make so much noise about their activities, but I mean, analysts know that behind the stock is a very, very astute management team that is focused and diversifying their earnings stream. So we still think we think the result they made is very real, and we think they're going to do much better, I mean, in the near future.
Well, certainly
it's still a buy on our grid.
Certainly the market is waiting for the company's full year results and anticipating good returns once again.